So this lesson is on double entry accounting in the general ledger. So firstly, the learning intentions after you've watched this video, you should be able to explain what a ledger account is and what the general ledger is. You should have some idea about what the posting rules are, also what are debits, what are credits, and how to cross-reference your entries. So let's firstly have a quick summary of double entry accounting. So every financial transaction in a business is going to have one debit entry and one credit entry. And to keep our accounting equation balanced and our books balanced, the debits will always equal the credits. That's for every single transaction that you record, and then also in the trial balance. So just recapping, this is a bit of revision, the 5 categories of accounts. So we have assets, liabilities, owner's equity, revenue, and expense. So by now you should know the definitions of all these, and I'm going to introduce you to the posting rules relating to these accounts. So I would recommend you have a read through this table and copy it down, because these rules are going to be fundamental to your understanding and your ability to successfully post entries into the general ledger. So maybe pause the video and take time to copy this table into your notes. So just our ledger accounts take the T form. So they're called T form accounts because they're in the shape of a T, as you can see there, the T. Now on the left hand side is where we put our debit entries, and on the right hand side we put our credit entries. So if you recall your posting rules, for an asset, to increase an asset account, you enter the transaction on the debit side. So a debit entry is going to increase an asset account, and a credit entry on the credit side will decrease an asset account. So looking at any liability T form account, a debit is going to decrease a liability, and a credit entry will increase the liability. Owner's equity will decrease with debit entries and increase with credit entries. Revenue, so revenue represents an increase in owner's equity, so it has the same posting rules. The debit entry is going to decrease revenue, whereas a credit entry will increase revenue. And expense, being the opposite of revenue, works the other way. So a debit entry will increase an expense, and a credit entry will decrease an expense. So let's talk through an example of how to post a financial transaction into your T form ledger accounts. So Alice has deposited $25,000 of her own funds into a business bank account to start the business. So this is typical of an initial capital contribution that's going to increase our bank asset and then also increase capital, which is an owner's equity account. So we have the business, the Fine Foods, their general ledger. So the general ledger is made up of all the ledger accounts, and at this stage Fine Foods is only going to have bank and capital. So this is our bank ledger account, this is our capital ledger account. Collectively, all the accounts in the business, or all the ledger accounts, are known as the general ledger. So how are we going to post this entry? So we've got our bank asset is increasing. Alice has put $25,000 into the business, into their bank account, so bank is going to increase. And double entry rules state that every transaction has twofold effect, and our debits will equal our credits, and capital has also increased because of this capital contribution that she's made to increase capital, which is an owner's equity account. We put a credit entry in. So debits on the left, credits on the right. Now finally what we need to do is we need to cross-reference the transaction. So what the cross-reference does is it identifies the other account affected by the transaction. So our final posting will look like this. So we've got the date of the transaction, the cross-reference, so our bank has increased, the cross-reference is capital, is because capital is the other account affected. And then if we look at our capital ledger account, same date, the transaction happened on the same date for the same amount, $25,000, but the cross-reference is bank because that's the other account affected by this transaction. So as you can see, we had one debit entry and one credit entry, both were $25,000. Our debits equaled our credits for that transaction, so our books will still balance. So here's a quick recap on the posting process to the general ledger. Firstly, you want to identify the category of accounts affected by the transaction. Are the accounts increasing or decreasing? Apply the posting rules that you've copied down from earlier in this video. In your ledger accounts, put your debits on the left, credits on the right. Debits will equal your credits, and then make sure you date and cross-reference the transaction. Thank you for your time.